law firm owner, ensuring that your trust accounting is being done properly and reconciled is a significant piece of the requirements through the bar, and everybody knows what can happen if that's not being done correctly and you get into a situation where you're in a bar audit. So although most of the bars require what they call a three-way reconciliation, even if yours does not, we still recommend you go through the process because it really is best practice for catching any errors that you may have. So here I have the worksheet that we use with our clients, and the reason, there's obviously a lot of different ways you can do this, but the reason we like this is it gives our firm owners a really quick, high-level overview of whether the trust account, basically whether it reconciles or not, and what issues there may be. So we can send this out to the clients once a month. They can look at it and make sure everything is looking like it should be with their trust account. So I'm going to walk you through the worksheet and show you exactly how this will work if this is something that you would like to implement within your firm. So what the bar requires in what they call the three-way reconciliation is that you reconcile your client ledger balance with your bank general ledger, which comes from your accounting system, with your bank statement. So the bar requirements are for these three pieces. We do go a step further and add in a column for the trust account liability. So this is the pieces in your financial software, and you should have your trust account as a checking account and then an offsetting liability because those funds are not yours. So what that does in the big picture is shows that you have this asset, but it is also a liability, so it does not affect your firm equity. So the first piece you want to pull is your client ledger balance. This normally is going to come from your practice management system, which is something like Clio or Filevine or Smokeball. There's a bunch of different options. But you're going to print a report out of there that shows every client. So John Doe and his trust account balance is $100. Jimmy Dean, his trust account balance is $2,000. And that report will satisfy that requirement of the bar, and you're going to enter that total right here on the worksheet. Then these pieces are going to come off of your bank reconciliation report that your accountant that your accountant is performing on a monthly basis. So the bank general ledger balance comes from your accounting software, and then your bank statement balance, and then any outstanding deposits or payments that you may have, that is going to calculate the adjusted bank balance. And these two things are going to be the same if you're pulling it off of your bank reconciliation because your accountant has already worked out any issues that there may be here. So then here in column J, we are just including a calculation so you can see very easily if there's any variance between your client ledger and your bank balance, which it should be 0. Then the fourth step we add in is your trust account liability. So you will run your balance sheet in your accounting software, and that will show you what this trust account liability is. So then in column K, we calculate the difference between, if there is a variance between your bank and your liability. So both column J and K should have a 0 balance. Now, we know mistakes happen. The reason we do this is so we can catch any mistakes if we have any. So sometimes you may pay an invoice from trust in your practice management software, and what should have happened is you should have then transferred the money from trust into operating, and that may not have happened for whatever reason. So that should be caught in this process. And then you may have a variance between your client ledger and the bank. So what we then do is outline what that variance is down here on the bottom. Client John Doe, we should have transferred $1,000 from trust to operating. It didn't in the bank, it didn't get done. So we did go ahead and do that transfer, let's say on October 5th. So we've then documented exactly what any variances are and then what the steps have been done to correct any of those. So I hope this helps. Again, many different ways to show this reconciliation. We like this format. We're very linear thinkers, and it's really easy to just look right across that row for the month and see what issues you may have.